Hi guys, the goal in this video is to quickly revise AS28 in roughly about less than 20 minutes. We're going to revise full AS28. Sir, even if I'm studying for the first time, this will most probably be sufficient for you to understand the core concept over here. What is AS28 talking about? It's talking about impairment of assets. Sir, what do you mean by impairment of assets? Sir, I am building one code, sir. In that code, software I am building. What is the software going to do? It's going to create one design. It will start creating some Canva images for me. But suddenly when ChatGPT came, so many technologies felt so ancient. When ChatGPT came, so many technologies felt so ancient. Like that, my asset is, for example, running in this value all along. But because of something, sudden decline in value of an asset. That's called impairment of an asset. Sir, how do I know impairment is going to take place? When should I test for impairment, sir? Are you following? Meaning, revaluation happens once in 3 to 4 years or on a yearly basis. That is there in AS10. Impairment, you don't have to check every day. Do you check for your health every day? Do you go do blood test every day? No. When do you check for your health? Only when you have some symptoms. Let's say you're not feeling hungry, you're feeling very bloated, or let's say sleep is not good for you, or you're having back pain. Then only you'll go and do some blood test. Correct? Like that over here, there are some symptoms. What are the symptoms? Internal indicators and external indicators. Internal indicators, now within the company what happened? Physical damage, some two employees were fighting, machinery broke, or obsolescence of assets. Now asset became redundant, old because of new, some technology came. Then economic performance of the asset has become worse. Or adverse effect due to asset is idle. Romanal, if you don't use an asset, value will be dropped. Do you know that, guys? If you don't use an asset, value will go off. Discontinuing or restructuring, plan to disposal. This you don't have to mug up. If something internally happens, you have to check for impairment. This is like a symptom, guys. So what about external indicators? Things outside my control. See, internal is mostly in my control. Keeping it idle or physical damage, if I take care well, it will not happen. But if you go to external indicators, significant fall in market value. I didn't expect that. Market reaction. Or technological changes, economic changes, war is coming, market changes, then the value of asset will change. For example, let's say Apple Vision Pro. Okay, it's a necessary product or luxury product. It's a luxury. Apple Vision Pro is a luxury. Why should I wear that and go out? It's a luxury today. Suddenly, if recession comes in US, people will not buy Vision Pro. For them, phone is enough. That's it. So, are you getting it, guys? So, all those changes. Carrying amount of net asset is more than market capital. I'll come to that later. Fine. Now, this point is beautiful. Increase in discount rate. I will discuss this when I finish the above concept. So now what I have finished, guys, I have just finished the basic. What is impairment? When the standard is applicable, not every year, unlike AS2 every year, AS10 every year, this is applicable if there are some symptoms. Those symptoms are called internal and external indicators. The minute symptom comes, like how you go and do blood test to go and check if everything is normal, here the blood test is called impairment loss testing, for which we have an equation, guys. We have an equation. Most of the sums are going to be in equation. So let me give you some hypothetical numbers over here. First, you have to find carrying value in the books. Nothing but your book value. What is book value? Sir, I purchased asset for 100. All these days I gave depreciation. How many ever years in the past? Depreciation 30. Current book value is 70. What is the meaning of this 70? My assumption is book value 70 means if I sell today, I will get how much, guys? 70. That's the main assumption. But then I will compare this with recoverable value. If I recover today, how much I will get? Sir, if you recover today, you will get only 75. Good. That's good. No, my book value is 70. If I recover, I'm going to get 75. I'm going to get more than 70. So it is good. Are you following, guys? But if my recoverable amount is only 55. Oh, book value is 70. But if you sell this asset in the market today, you will get only 55. That means something which is worth only 55, you are showing in the books for 70. You don't have sense. You are showing at higher value. So there's extra how much? 70 minus 55. How much, guys? 15 will be written off to P&L with the entry P&L to asset, this entry will be impairment loss. Are you following, guys? That means in book from now, value will not be 70, value will be revised to 55, where carrying amount becomes equal to recoverable amount. Are you following, guys? So there is no, sometimes they tell formula, carrying amount, recoverable amount, whichever higher, whichever lower. No, I don't need all of that. Understood logica? Basically, if carrying amount is more than recoverable amount, is there going to be impairment? Carrying amount 70, recoverable 55, impairment rika? Illa. Let's say opposite. Carrying amount is more than recoverable, there is going to be impairment. I will just write again. That's why I said, why we did this demonstration, to show that writing formulas I personally don't like, guys. So if carrying is more than recoverable, carrying is 70, recoverable is 55, then what is it? I have to provide for impairment to the extent of that difference. Again, no formulas. You got the logic. You got the logic. Something worth 70, I can only sell for 55. What if recoverable, again, just for clarity, if it's 90, do I have to do impairment? No. My book value is 70, market is 90. That means when no need impairment, when recoverable amount is more than carrying amount, no need impairment. But please don't mug up like that, otherwise you will be confused, like how I got confused now. Are you clear, guys? Are you clear, all of you? 100%? Okay, fine. Sir, how to find this recoverable amount, sir? Is it market price? For recoverable amount, they are asking you to do 2 tests. They are asking you to do how many tests, guys? 2 tests. What is that? First, they are asking you to find net selling price. That is nothing but market price. If you sell in the market today, how much you will get? This is the important area. Look at this. It is the amount obtainable from sale of an asset in arm's length transaction. Basically nothing but market price is called net selling price. In this you will less the cost of disposal. What is cost of disposal? Some brokerage. I want to sell my house, sir. House I'm going to sell for 1 crore. Commission 1 lakh. So 99 lakhs is my net selling price. Are you following, guys? So you have to find net selling price. This is if you sell now. If you sell now. But if I don't sell now and if I use the asset, what is the value I will get in future? Very simple, guys. Any asset, either you can sell now and get a price, that's called net selling price, or any asset you can use for the future and get some money, that is called value in use. If I use this asset for next 5 years, if I use for next 5 years, sir, I will generate cash of 50, 30, 40, 25, 20. You find the present value of that now. Look at this. It is the present value of future cash flows derived from an asset or a CGU. Are you following, guys? Are you all with me? Have you understood this point very clearly, guys? Understood? Look how beautifully they have drafted. That means recoverable value. The idea is we have to see, if you dispose now, how much you will get. If you use the asset in the future, how much you will get. Any asset, that's the logic. Either dispose now or use for the future. Which is beneficial? Whichever is higher, I will tell. If I use it, if I dispose it now, I am getting 60, sir. If I use it for future, I am getting 75. What you will do? You will use it. Correct? Sir, if I dispose now, I am getting 90. If I use in the future, I am getting only 60. What you will do? Dispose. Any prudent person will do whichever is higher. That's why they are saying take whichever is higher. Are you following, guys? So recoverable value is higher of net selling price and value in use. Therefore, for exam, what I will remember, sir? For exam, impairment loss is carrying value minus recoverable value. This is applicable only if carrying value is more than recoverable value. What is recoverable value? Higher of net selling price or value in use. In this only we have lot of sums. Illustration one also talks about that. But before we get to sums, let me finish all the concepts. Have you understood, guys? Now carrying amount is not only original cost minus accumulated depreciation. In the past also, if you have done impairment, that also I will reduce. Accumulated depreciation and accumulated impairment loss. Are you following, guys? Sir, impairment happens only once in life. No, you go to hospital only once in life. You keep going, depends on how healthy you are, how is your lifestyle. So same way how you treat your asset, you have to keep going and doing impairment loss testing. Can happen multiple times a year, can happen once in multiple years. Are you following, guys? This is the base. This is the main core of the standard. Now to proceed further, this second part is going to be little bit of little advanced stage. Theory is there in syllabus, but they are yet to test this itself fully. That means in the initial few attempts, them testing this is going to be a little less, but quickly let me compute. This whole page we are going to discuss on how to compute value in use. Few key points. Considering the whole standard, this will be second category in the standard. Before I go to the next category, which is going to be accounting for impairment loss and CGU. Quickly let me finish this, guys. Value in use, I told you, is future cash flow into discount rate, correct? In this cash flow, what I will include, what I will not include, guys. For example, can I include cash flow like tax cash flow, interest payments, all of that? Look at this, what he is saying. Cash flow from use of the asset you will include, and necessary cash flow, that means I'm using an asset, cab. In that cab, petrol is an expense, I will minus. Are you following, guys? Then residual value also I will include, because when I sell this asset I will get this after 5 years. That also I have to find the present value. And basically cash flow used for day-to-day servicing of the asset. What I will not include, I am going to spend something, sir. Commitment is not yet made on my asset. In third year I will do some restructuring. No, future restructuring, not yet committed. Don't do. See, why is this important? You are finding future cash flow. That means you are projecting cash flow for next 5 years. In that projection, we will not include what, guys? Things which are not yet committed for. That's how life is, no? Okay, fine. Next, any financing activities we will not include. Cash flow financing will not include. Any investing activities also we will not include, because investing activities will not come in cash flow here. It will go into balance sheet capitalization. Correct? That means I will include only cash flow from operating in nature. We will also not include tax. That means when I get the asset, I will take only cash flow after tax, because tax is going to government. What I am getting? Cash flow after tax. Are you following, guys? Clear? These are what is inclusion and exclusion in future cash flow. I have briefed the core points is: take operating in nature, don't take financing and investing activities, take cash flow after tax, and don't take any expense or income which is not yet committed to. Are you following, guys? Clear? Yes, hold on, let me finish off. Next, what about the discount rate? Discount rate, they are saying you take the pre-tax rate. Take the pre-tax rate. If rate is not available, then you take entity's weighted average cost of capital. If that is also not available, you take entity's incremental borrowing rate or other borrowing rate. This is similar to AS 19. AS 19 will take IRR. IRR not there means you take incremental borrowing rate. That same concept will come over here. Are you following, guys? Then they are saying, when you are taking the future cash flow, please take reasonable assumptions, all those things, and recommendation, don't do forecast more than 5 years unless you can give some justification. This is the B category topics in this standard, guys. Next, we will go for impairment loss. How to account for impairment loss, individual asset. Then I will move into the concept of CGU after that. Okay. Follow, guys. Follow. First of, okay, now simple. Asset is in the book set 70. Okay. Carrying value. Recoverable amount, let's say, is 50. That means you have to provide for an impairment loss of 20. This 20 will be reduced from carrying value. It becomes net of 50. This 20 will be debited to your P&L account. Are you following, guys? That's what I'm saying over here. Look at this. Accounting for impairment loss, what they are saying, charge to P&L. Charge to P&L. Next case, sir, this asset is 70. This is the most important discussion. If you did not understand the cash flow and discount rate, leave it. They are not going to test that much. This is the main one. Okay, this is all the ICA sums are based on this concept. Again, I will come to this question. Look at this. Carrying value is how much? 70. But someday in the past, this 70 came because I revalued from 60 to 70. That means, follow very carefully, guys. In my balance sheet, I already have a revaluation reserve of 10 with respect to this asset. Are you getting it? That means in the past what I did revaluation now became impaired. How, sir? I may be healthy fully. Somebody with six pack will not get health issue. Are you getting it, guys? Okay, so here what they are saying, follow. Now again same impairment happened. Loss is how much? 20. But I will not debit fully to P&L. Are you following? The entry will be to the extent of revaluation gain available. Debit that first. So entry will be revaluation reserve account debit 10. Then P&L account 10. 2 corresponding asset how much? 20. Are you all getting it, guys? So what they're trying to say, very simple. Individual asset now, first they are saying charge to P&L. Sorry, first charge to revaluation surplus. After that charge to P&L if there is no revaluation surplus. Are you following, guys? Harish understood? Okay. Now, sir, what about reversal? I will use the same numbers. Sir, what about reversal, sir? Reversal means first impairment came, now again reversal. Sir, because of ChatGPT, all my software I built value went off. Now international court is saying ChatGPT, all the LLMs are banned. You should not use ChatGPT. Then my asset will again get value. Are you following, guys? Practically not going to happen, guys. So AI will be banned. Impossible. Whenever a new technology comes, people will lose jobs. There will be people who hate it, but it is for the future, so we have to adopt to it. That's the truth, guys. Okay. Whether you like it or not, sir, all the jobs are going. What happened to artists? Of course, we feel bad for them, but whenever something new happens, some people have to sacrifice. Correct? What else can we do? When computers came, so many accountants lost their jobs. But what to do? We have to just keep moving forward. So come back here. Let's say reversal happened, guys. 70 minus 50. Impairment losses 20. Now what is the carrying value of asset in our books? 50. This 50 again next year became 55. Became how much, guys? 55. That means impairment loss is reversed. So I already debited how much to my P&L? I debited to my P&L 10 and revaluation reserve I debited 10. Now when this 50 becomes 55, I have to reverse how much? 5. First reversal will go where? Revaluation. Then it again goes to my P&L. Look at this. Initially reversed to revaluation surplus to the extent of revaluation surplus. Had there been no impairment loss, if impairment loss was not there, revaluation would have been still 10. It would have been still 10 now. So now because of revaluation only, this 10 became 0. Now when a reversal happens, you will bring it back up to 10. Beyond this, thereafter transfer it to P&L to the extent of carrying value. Sir, I understood, sir. That means if my 50 worth of asset again becomes 70, that is good for me. Correct? So P&L I will again credit how much? 10. Revaluation I will again credit how much, guys? 10. Pakka. 70 became 50, debit revaluation, debit P&L. 50 became 70, credit P&L, credit revaluation. What if at the time of reversal 50 doesn't become 70, 50 becomes 75? That means it is going beyond the original amount of 70. Are you getting it? In that case, up to 70. That's what he's saying. To the extent of carrying value. What is to the extent of carrying value? To the extent of 70, 10 and 10 will be treated like reversal. 10 and 10, revaluation reserve reversal, P&L reversal. What is the beyond extra? 5. We should not reverse. That is not reversal of impairment loss. That is revaluation. So the standard beautifully says, when 70 becomes 50, it's a impairment loss. When 50 becomes 70, it's reversal of impairment loss. When now this 50 becomes 75, this extra 5 is not reversal of impairment loss. Reversal can always be to the extent of loss only, no. So this extra 5 will be treated under AS 10 as revaluation gain. Are you following guys? For that you have to check AS10 separately. That's it guys. With this we have learnt how to account for individual asset. Are you all with me guys? Are you all with me? Okay. One second Harish, I will finish off the whole thing and then next this is for individual asset guys. With this individual asset in the standard has come to an end. One more small concept for individual asset. Sir, can I do impairment for goodwill? If goodwill as an asset gets impaired, you can never reverse. Sir, I have a biryani restaurant. In that restaurant, let's say when lizard came, name is damaged. You can't reverse. See, goodwill, if someone's name is damaged, it's very hard to reverse it. Very, very hard. You have to put 5 times the effort. So they are saying goodwill once reversed cannot be once impaired cannot be reversed unless they gave some exceptions. In CA final, these exceptions are not there. In CA final, goodwill impaired is impaired. You can never reverse. So be careful while impairing. But here they are saying the impairment was caused to a specific external event. It's so exceptional and it's not expected to reoccur. Are you following guys? And subsequent events have effect of reversing that. Are you following guys? Clear? Lizard came, then future they made all the changes, so people are believing. So goodwill can never be reversed unless it is caused to is external event not expected to reoccur, and future they have changed all the mistakes that happened in the past. This is with respect to individual assets guys. Coming for impairment for CGU. Impairment for CGU. Sir, what is this? I should have told in the starting itself, this standard is of 2 parts. It's of 2 parts. What are the 2 parts in the standard? Regular asset, which what we finished so far. CGU is another asset. So CGU also, impairment is going to be same formula. Impairment loss for a CGU, so far they have not tested, will be carrying value of CGU minus recoverable value of CGU. Recoverable value is net selling price of CGU compared with value in use of CGU. What is CGU? Cash generating unit is a combination of assets. This classroom, this class is happening because I have a camera in front of me. I have a laptop where I'm recording. I have an iPad where I'm writing over here. There is chair, there is AC, there is light. The light separately, it's of no use. If only light is there, can the light generate cash flow? No. But all these assets coming together, the light, the chair, the camera, the Mac, the iPad, this table, everything. I mean, recording students can't see that, of course. All this put together only, students are coming and paying class. The class is being recorded, recording is being sold. The recording is generating cash flow because of all of this. Can we take the class without AC? We have experienced it. In the AC, how much loss we had. Correct? So, not for me guys, the laptop wants it. Laptop wants the AC. Okay. So, but AC alone, if nothing is there, I am not there. Asset is not there. Chair is not there. Only AC is there. Will you come and sit here? AC irukku sir, anga poi nikran. No. That means a CGU is basically, follow guys, what is a cash generating unit? It's not one asset. It's smallest identifiable group of assets. AC, camera, fan, light. Together, they can generate cash flows. They can generate cash flows together independently from other group of assets. That means in this classroom, if there is no, when we lost current here in 3rd floor, current was there in ground floor and 1st floor. Class was going on there. Correct? That means this classroom is an independent CGU that can have separate CA class batches, and we can separately generate cash flow irrespective of the other assets in the entity. Are you getting it guys? Are you following? So very important. What is the CGU? Because in exam they will ask you questions. CGU or not CGU? Smallest identifiable group of assets generating cash flow independently from other group of assets. Exam, there's a question. Company has 40 magazines. Magazine, you know what's magazine guys? Comes to your house. Company is treating each magazine as a separate CGU. True or false? Yes. Because each magazine will have separate viewers, separate subscribers, separate income. Whether 39 magazines editor is coming or not, I don't know. But the one magazine, if editor is not coming, then for that magazine, revenue will be affected. Are you following guys? Are you understanding? Clear? Are you all with me guys? Okay, so this is CGU. Sir, for CGU, how do I determine? The same thing. Now the whole standard is the same repeat, guys. The whole standard says how to find impairment loss for individual asset. We saw how to find reversal of individual asset. Here we have to do how to find impairment loss for CGU, how to account for reversal of CGU. This questions only we don't have in study material, but we have it in our library of adjustments. I have questions, guys, where we will do impairment loss sums for CGU also and reversal. But here theory, let me finish off the full theory over here for AS28. Those who don't panic about those sums, because theory only is important, sum is just application. What we have to do, we have to find first the carrying value. Look at this, I have to find out what is the carrying value, correct? Independent asset, na book value I can take, but here I have multiple assets. Think of the example, camera, laptop, AC, fan. So I have to take carrying value of all assets. Carrying value of AC, carrying value of camera, all that put together. Plus, this classroom might be in 3rd floor, but we are in 3 floors and we have a brand, we have a goodwill, correct? So for this goodwill, how much is allocated to 3rd floor? Because of 3rd floor, what is the goodwill? Can we identify, guys? Not easy. Not easy. For example, if I take Tata, Tata as a brand has goodwill. But how much came from Tata Steel, sir? How much came from Tata Airlines? Just yesterday, this Kashmir attack happened. Immediately what Tata did, what Indigo did, they made the flight price double. Now every tourist in Kashmir will want to leave from there and come back for their safety. So they made the price double. What Air India did, Tata brand, they didn't make the price increase. What they did, they put a post yesterday. What they did was simple. They increased the number of flights to and from Kashmir, and whoever booked in for Kashmir vacation for next 10 days, they are giving full refund. Other airlines not doing. Now these kind of small acts gives the brand goodwill for Tata. Correct? Now can I say goodwill for Tata came because of flight or it came because of Tata Steel, Tata Tia? You can't say. It's very difficult practically, but they are saying allocate goodwill. How to allocate, sir? CA final, leave it. Here they will give you the values. Each asset, this is this for this CGU, idan goodwill, add it. And lastly, allocable corporate assets. What do you mean by corporate assets? I have classroom, 3rd floor, 1st floor and ground floor. Admin room, there is AC in admin room. That AC in admin room is for 3rd floor CGU, 1st floor CGU, ground floor CGU. I don't know, correct? So I have to allocate corporate assets. Director of the company is going in car, sir. That car is for which CGU? So don't worry. How to allocate, sir? Not in CA Inter. They won't ask you. They will give you the values. Look at the questions we're going to solve also. They will give you the values. Full value he will give off. So you don't have to panic about it. Simple. So that means, sir, for me what is important? What is the carrying value of CGU? Carrying value of CGU is nothing but individual asset carrying value plus allocated goodwill plus allocated corporate assets. For this, I have to find same thing, recoverable value. So carrying value of CGU minus recoverable value of CGU. Are you getting what I'm saying, guys? Standard is 2 parts. Individual asset mursto. That only will mostly come in exam. Okay, CGU same thing, but for the whole unit. So carrying value you understood now. What is recoverable value? Thankfully here, recoverable value is easy. Same. Higher of net selling price. I want to sell the whole 3rd floor classroom to some other academy. What they will pay? They will pay on money and come. That one. Or value in use. If I use this classroom for another 5 years, how many batch I can conduct? How much revenue I will get? Foundation, inter, final. Take all that cash flow. Find present value. Minus the expenses, rent, electricity. Are you following, guys? This is easy. Recoverable value of CGU is generally easy because I will sell the CGU together or I will generate cash flow together. So therefore in exam, don't panic, guys. In exam, what will happen for CGU? When it comes to CGU in exam, carrying value is going to be individual asset plus allocable goodwill plus allocable corporate assets minus recoverable value. This will be value in use or estimated selling price. Usually in exam, this will be given, this will be given, this will be given. Are you following, guys? They won't ask you to do breakup and all, not at interlevel. Sir, now if there is going to be loss, sir, my CGU carrying value is 150, sir. Recoverable value is, let's say, how much, guys? 130. I have loss of, correct? How much loss? 20. This loss, where should I account? In individual assets, straight away to P&L. Here I have multiple assets. Should I adjust with goodwill, corporate assets, individual asset? Are you getting it, guys? Are you getting the logic? So the standard beautifully says, impairment loss of CGU, first write off with goodwill. So they are saying, this is important. For example, what is they are saying? First write off with goodwill. So full allocable goodwill, I will write off. Are you following? I'll write off the full allocable goodwill. Next they are saying, allocate to other assets, including corporate assets, in the ratio of other assets and corporate assets. So for example, if individual asset is 100, goodwill is 10, and corporate asset is 30. Okay, what is my loss here? 20. First I'll write off with goodwill. So my loss 20 minus 10, how much is left? This 10 will be apportioned between individual asset 100 and this 30 in the ratio of 100 is to 30, 10 is to 3. That's it. Are you following, guys? That's all. Are you getting how to do the sum? That's it. So this is how you have to write off the loss. Are you following? Sir, what about reversal? Same. Now if there is reversal, if there is going to be reversal of loss, just like how previous case we had reversal, first for assets other than goodwill. So here they are saying, don't, if there is reversal, goodwill is not reversed. You have to reverse what first? Individual assets and other corporate assets proportionately to bring them back to the original price of 130. Beyond this, if there is gain, then only you will bring back what? Goodwill. That means at the time of hitting impairment loss, first goodwill will be reduced. At the time of reversal, goodwill will come last. That's all for exam. Are you following, guys? Clear? Now what they are saying, again same concept. Now recoverable amount is 130. At the time of reversal, if 130 becomes 180, reversal is allowed only up to 150. Beyond that, the extra 30 is not a reversal. That's what they are saying. The carrying value of asset shall not be increased above the lower of its recoverable value or carrying amount had there been no impairment. That means maximum what was the price before impairment, up to that only I can do. Are you following, guys? In this there are very good sums, because here I am doing impairment loss and reversal in the same year. What if impairment loss happens now and reversal happens after 3 years? There is depreciation. That only if you will see in sums. But it's going to be same concept. What is the concept, sir? When I am reversing, the reversing should not go beyond the original carrying value. There is no revaluation gain here. Here there is no revaluation gain because this is for a CGU. Are you following, guys? Understood? So this, if anybody feels AS28 is difficult, it is because of this part what I explained now. So far not tested in exam. Don't panic. If you know this base itself, it is enough for most of the sums. Okay, are you all with me, guys? That's what we did for accounting for loss of CGU. That's it. With that, standard is almost done, guys. Last two miscellaneous concept, not that important, theory based. First let them test the other main questions. Again miscellaneous concepts. With this I will close the standard. Impairment in case of discontinuing operation, AS28 with AS24. I have a discontinuing operation which got impaired. I wanted to discontinue because I don't want to continue this business, and now that became impairment. What they are saying, after the board approval, they are saying, so basically same thing. They are saying how to account the loss. If you are doing binding sale agreement, then compute recoverable amount for entity as a whole. If you are doing piecemeal distribution, compute recoverable amount for each asset in each group. If you are doing termination by abandonment, compute recoverable amount for each individual asset. So how to compute recoverable amount? Based on what type of discontinuing operation? If you remember AS24, it has 3 types of discontinuing: whole entity, piecemeal abandonment. Whole entity na they are saying do for whole entity. Piecemeal na they are saying do for assets in group. Abandonment na individual asset. You compute the recoverable amount and then compare. Very very less important theory guys, but be aware I want to cover the full syllabus of AS 28. Lastly, this is only a theory concept guys. Don't expect an exam, or I should not say like that. Chances are very less. I will just save myself. Chances are very less guys, because it's a very CA final concept. I told you we have to allocate goodwill or corporate assets. And I also told you in Tata case how to allocate we don't know. Correct? In those cases, if you are not able to allocate, they have something called bottom up test and top down test. Okay, bottom up and top down. What is bottom up test? Allocate goodwill and corporate assets and compute impairment. So if you are not able to allocate, it's a much detailed concept. I'm just going to touch upon this guys. What they are saying, to compute impairment loss, allocate goodwill and corporate assets for the whole entity. Okay. Top down test, compute impairment loss for the larger entity as a whole, including goodwill, and write off loss to unallocated goodwill. See, I'll give you a brief. Top down test na, my entity is a combination of, look at this, CGU1, CGU2, CGU3, CGU4, correct? Now top down, if I am not able to allocate goodwill for any entity, they are saying take the total of all the 4 and then you add goodwill at entity level. At what level guys? Entity level, and you perform impairment testing for the entity. Entity or a carrying value versus entity's recoverable value. You will find some impairment loss that you allocate to CGU. Are you following? That is what guys, top down. Bottom up, they are saying do it separately for each CGU. Are you following guys? This I can explain better only if there is going to be a sum. In other words, in bottom up they are saying somehow allocate and test only for CGU. In top down, if you cannot be allocated, simple. For exam, what to remember sir? If you are not able to allocate, then you do both bottom up and top down test. If you can allocate, what we have been doing so far is what? Bottom up test. Are you following guys? That's it. Simple. Allocate panna mudliya, do top down and bottom up. Allocate what we are doing is bottom up test. Are you following guys? Last one kuti concept which is there in exam. Let's take only one CGU, which is our classroom. This CGU comprises multiple assets of camera, let's say TV screen we have, let's say Mac, then we have AC. Okay. Now recently what happened? AC did not work. Should I do impairment testing for CGU? Now AC is part of the CGU. So even if AC is impaired, I will not provide impairment loss if CGU is not impaired. I'll explain. AC or a carrying value 100. AC or a recoverable value is 90. So you have to provide impairment loss of 10. But CGU, the AC which is used in a particular CGU, the CGU's carrying value is 500. Okay. The CGU's recoverable amount is 550. Should I do impairment loss? No. That means if there is no impairment for CGU, within that CGU, if a particular asset got impaired, no need to provide for impairment, because we are not treating the asset independently. This asset is taken as part of CGU. Beautiful question, important. Are you getting it? So within CGU, asset damage, I don't care. Within CGU, if asset gets damaged, I will check if CGU got damaged. If CGU is not impaired, then I will continue without impairment. Are you getting this guys? All of you with me? Hello? Clear? Okay. That's it. With this, I think we spent about 40 minutes, but it's okay. I'm almost done. Full revision of AS 28 for you guys. Now all the sums we will do it quickly in the same 40 minutes to 1 hour and close AS 18 in our workout. Are you all with me guys? Understanding? How many of you already know the standard, felt like a revision? How many of you studying first time? Oh, almost all of you. Understood? Sure guys, we will do sums. Once we do sums, you will get full control over here. But for those who know AS 28, this 40 minutes will be a treat guys. Thank you.